try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been getting bigger.
Hey guys, what's going on? Jebb here, and in today's video, we are going to be discussing whether or not the United States of America has finally gone into a recession. A recession is classified under U.S. economic policy as 2 quarters of negative GDP growth. We saw negative 1.6% GDP growth in quarter 1, that's January, February, and March of this year, and it is possible that we're about to see even more negative GDP growth coming in this quarter after that gets confirmed not long from now. We're going to be discussing that and quite a bit more in today's episode. We're also going to be talking about how Michael Saylor, who has an average entry price on his 129,000 Bitcoin valued at $3.98 billion worth of purchasing, just bought another 500 Bitcoin worth roughly $10 million. Even though MicroStrategy's average entry price is $30,000, he's down 33%, but he's still buying more, dollar cost averaging, buying the bottom. If the guy looked like he was about to get liquidated, he probably wouldn't be buying even more, so that's a pretty good story. However, Three Arrows Capital, did they just go under? Grayscale talking about how 99% of people believe that a Bitcoin spot ETF should be approved, quite a bit more. We're going to be talking about Celsius a little bit in today's show, and today's afternoon video is going to be on them as well. What are the bond yields doing? Consumer confidence, quarterly GDP data, and more today. Has the United States of America officially slipped into a recession, and has the cryptocurrency market responded to it in the way that we would expect by dropping? We're going to look at the price action and the fundamentals today, but we are joined today, as sometimes, by none other than T-Shroom. How are you doing, T-Shroom?
Well, I'm doing better than I deserve, Jebb.
Oh, I
Bet
don't
you didn't
think
see
that's
that
true.
one coming.
I think you deserve even better than you're doing.
I was going to say, hey, I
Wow.
haven't been introduced yet.
Yeah,
We're also joined, as always, by Smay. How are you doing?
Hello, everybody. I'm doing fantastic. We just had a thrilling discussion on the car market finances, and man,
It's crazy.
the idea of saving money gets me so excited. So I mean, I am just thrilled. I'm fired up. Also, I got back in the gym this morning, guys.
Woo!
Very nice.
So I
go,
worked
Smeg.
out this morning. I think that's also contributing to my good mood. So I'm just all around feeling fantastic. This is a great day.
too.
But I would like to share this feeling of fantasticness
Fantastic.
by first saying subscribe to Reels on Reels, and 2,
Do it.
Mitch Shaw, Elliot Locke, JoJo, Adam Rourke, who else we got here? Sultan of Salt, JoJo, Agent Gold, D's Nuts, Eye of the Beholder. I'm sorry, I shouldn't have sold that so hard. Why You Loud? Who else we got here? Sean Frosh, Grand Roofing Incorporated. I love that guy. And can I just take a moment real quick? Kelly Kellum.
Hello, Kelly. How are you doing, Kelly?
Love Kelly Kellum. I miss Kelly Kellum.
That's
I
right.
want him in my embrace. Kelly, you are a cool guy, and don't let anybody tell you that you're not a cool guy, because you are the coolest guy. Another person who I think is the coolest guy is his dad, Bradley Kellum. So he's in chat today. And then we also have one of the other coolest guys, and he drives a Subaru, and I love Subarus. We have Brad Geidel.
No, let's go Brad Geidel.
I love Brad Geidel.
That makes sense that Brad drives a Subaru. I can see him.
And
in a
I've
Subaru.
gotten to
That makes
actually
sense.
embrace Brad Geidel, and he's a good hugger, I will tell you that. And then we have Tristan Williams, and then we have
Philly Fan 61.
Philly Fan 61. Man, this is the longest
Unfortunately, I
green name
can't quote
segment.
Philippians 6:1 because there is no Philippians 6. It only goes to chapter 4. But I
Man.
was gonna do that, and then I remembered there's only 4 chapters in Philippians.
This is such a great. This is probably the longest green name segment, and I feel like keeping it going, but for the sake of the show, I'm gonna send it back to Juju.
Well, we also have an amazing comment here from CryptoNebs83. Can I just say Club DeFi is the best educational platform I have come across. It is so well thought out and concise. We even got a gray, blue, purple, or pink check mark. I'm colorblind, so it could be one of those, but we got a check mark nonetheless. Super excited about that. Man, it's been a great day. Whenever you start your day with the Lord, it always ends up being a wonderful day, and that's what we're doing here today. So we're going to go ahead and jump on in to some headlines here. We got some pretty big stories to break down. Number one, Michael Saylor, founder and chief executive officer and former interviewee of this channel of MicroStrategy, has purchased an additional 450 Bitcoins for roughly $10 million at an average price of $20,817 per coin as of yesterday. MicroStrategy holds, drumroll please, 129,699 Bitcoin acquired for $3.98 billion at an average price of $30,644 per coin. For those of you out there who are curious, that does mean that they are down 33%. For those of you out there that are curious, Michael Saylor has bought quite a bit of that Bitcoin on leverage. For those of you who are curious, there are companies right now that are getting liquidated and coming insolvent. MicroStrategy and Michael Saylor does not seem to be one. I don't recall the number that Bitcoin would have to go to for Michael Saylor and MicroStrategy to become liquidated on any of their Bitcoin purchases, but it is ridiculously low because of the operating income of MicroStrategy being so high. The fact that they're holding so much Bitcoin is a good thing, so long as they continue to hold it and don't dump it on the market. But Michael Saylor is an absolute diehard Bitcoin fan, so I think that is going to be the case. So, love seeing the buying pressure, love seeing the liquid supply go down. It's a good thing all around. However, one thing that is not, in fact, two things that are not, investment firm Cypherpunk Holdings sells all of its Bitcoin and Ethereum. Canada-based investment firm Cypherpunks Holding, ticker symbol HODL, that's pretty cool, has dumped all of its Bitcoin and Ether, it's also a little bit ironic, has dumped all of its Bitcoin and Ether holdings to ride out the current market risks. The company sold 205 Ether, which isn't a ton, but then they also sold 214 Bitcoin valued at 6 million CAD or 5 million US dollars. It had accrued a total of $5 million in proceeds from the sale. So unfortunately for them, they sold Bitcoin on the dip, and they are definitely going to be regretting that in the future. The reason that they would be selling that is almost certainly because of the fact that their shares have tumbled 50% this year on the Canadian Stock Exchange, and they're also seeing valuation drop out massively. They probably don't want to go insolvent like what just happened to 3AC. For any of you guys who have been following this story, we've talked about it quite a bit on the channel. Big update, and looks like the final update that we're going to be bringing you on 3AC, at least the final understanding of what's going on here. Three Arrows Capital liquidation ordered in Britain and British Virgin Islands. This is not a Bybit order that's getting liquidated. This is the company getting liquidated. Partners from Tino Restructuring have been called in to handle the insolvency. The liquidation of crypto hedge firm Three Arrows Capital has been ordered by a British Virgin Island court. A person with knowledge of the situation to be rendered insolvent. The liquidation was ordered. A person with knowledge of the situation told CoinDesk. The order was made on June 27th. It is now being brought to our attention as of today at 6:32 a.m. Broke by CoinDesk. Partners of New York-based Tino Restructuring have been called in to handle the insolvency. This is a really big deal, guys. This is almost $1 billion of insolvency. We talked about this a few days ago. Crypto broker Voyager Digital issued a default notice to 3AC this week after the fund failed to make the required payments of, I want to say it was around $20 million in about a week or so ago, and then they were called to pay all of it back a few days ago to the tune of 15,250 Bitcoin and $350 million in USDC. They've been an active investor in the digital asset industry in recent years, but they are now going under. And we're going to talk about a little bit later what Kevin O'Leary, who is another person this channel has interviewed, so make sure to check out that interview on the channel if you're interested. He talked about how we might need to see quite a bit more of this occur before the bottom can officially be in, but we'll get to that later on in the show. Finally, last thing we'll go over in our market watch, in our market pulse, before we jump into our technical analysis is this. This is a really, really important, powerful story. So we've got two very unfortunate stories of companies going under and selling crypto at a big loss, which indicates the signs of the times. But also, we have Michael Saylor buying a lot of Bitcoin because he knows what he's doing, it seems like. And also, 99% of SEC comment letters support Bitcoin spot ETF. If you'll remember, I don't remember how many months ago now, but many, many moons ago, we talked about how the SEC was taking comment on whether or not they should approve a Bitcoin spot ETF. And it looks like Grayscale has come out with the data. The approval of each and every Bitcoin-linked investment product strengthens our argument as to why U.S. markets deserve a spot Bitcoin ETF, said CEO Michael Sonhession. I've read a lot about him before, but it looks like I'm still struggling to pronounce his name. It's a hard one. I'm pulling a Tim right now. But the fact is 99% of SEC comment letters, that being the public mailing into the SEC, say that we should have a Bitcoin ETF. Now, of course, it's not something that is decided by popular demand, but considering the SEC's job, in theory, in its mandate, is the protection of consumer interests, if 99% of the consumers are saying that this is something that they want, then what purpose does the SEC's mandate have in blocking a Bitcoin ETF when 99% of the public that mailed in said they want one? We called you guys to mail in and do this, and it seems like a lot of people came out and did it, and we're very, very excited about that. But we're going to continue talking about all of the stories going on in the mainstream right now, having to do with recession, having to do with GDP growth, having to do with all of these things a little bit later when we enter into our discussion segment here at the halfway mark through the hour. But first, we need to jump into some technical analysis. If you were enjoying today's show, go ahead and smash that like button, subscribe to the channel, go to full screen real quick, Smay. I want to check how many likes we have. We have 153 likes, 858 people watching. We can definitely see that get a lot higher. Guys, we have a great show lined up for you today. We cannot wait to bring you all this content. Definitely hit that like button, subscribe to the channel if you have not already. T-Sherm, do you have any thoughts on those market poll stories before we jump into our technical analysis here?
I mean, the biggest one is that, Michael Saylor is still buying, and so am I. That's kind of my takeaway. It's good to see. And it's also kind of a testament to his overall wisdom. He's not just observing that Bitcoin is valuable and really committing onto it, but he's also hasn't compromised and let go of his focus on MicroStrategies, which MicroStrategies, if you didn't know, they sell software, right?
Yeah.
They actually do
engineering
something.
and patent company.
Yeah, they don't just buy Bitcoin; they also do other things. And so the fact that he's been able to have the wisdom and the foresight to keep investing in the business and keep growing the business is great, because in bear markets like these, you need to have income flowing in to be able to DCA. So really good ups on MicroStrategies.
Absolutely. I'm super excited for what Michael Saylor is going to continue to do in the cryptocurrency space. They're continuing to accumulate that coin. Maybe one day Michael Saylor and MicroStrategy will hold over 1 million Bitcoin, and then they'll be on par with Satoshi. That would definitely be very interesting for the centralization of cryptocurrency. Of course, you don't want too many wallets holding everything, but those are some on-chain metrics we've actually discussed in previous videos, and that might be a good place to start off here, is that the total amount of crypto being accumulated is substantial right now. It's very substantial. In fact, the number of people that are holding Bitcoin to themselves and they're not selling it is massive right now. The illiquid supply is doing very well. And that's a good thing, because it means that the people that are the strong money, the people that have been here for a very long time, they are holding on to Bitcoin firmly, and they are not selling it. But what we do see happening right now is that some people are. We are seeing some of the bedrock. Queen in chat really resonated with that analogy I used a couple weeks ago. Keep saying bedrock present. Even some of the bedrock, unfortunately, is starting to get shaken out. And that's kind of what we're seeing right now. I asked our guest yesterday what we saw, Kagan yesterday, what we were seeing on the chart. And one of the questions I didn't get to ask him was whether or not what we were seeing in this little sideways accumulation right here is this strength from the bulls? Or is this the fact that the bulls are still weak and the bears are just letting up a little bit to take a breather? And I think that kind of leads us well into our technical analysis here, because what I'm seeing on the chart is that the bulls are not in power right now. The bulls are not the ones with the strength right now. We are still heavily in a downtrend. In fact, if we look at Lux Algo here, which, by the way, if you don't have Lux Algo, you are missing out, because it called this entire trend. Take a look at this. We have a strong confirmed sell signal right here, or we had a sell signal right here on the 6th of April. Then it got confirmed here on the 10th of April. The next day it turned into a strong sell signal with this turning red. We, ever since we confirmed here on the 10th of April, are down 53%, and Lux Algo called the entire movement. So make sure that you sign up for Lux Algo. Coupon code Jebb, J-E-B-B, 20% off with the link in the description box down below. Called this entire movement. Lux Algo is saying that we're still in a downtrend. We're still in a confirmed movement to the downside. In fact, Lux Algo has perfectly called all of these markets for a very long time. If I just go on BLX here and I show you what we're looking at with Lux Algo, I will just show you the last year of price data so that you understand, one, how powerful this technical indicator is, but two, so that you also understand why we're paying so much attention to it. Let me go ahead and come in here and reset the indicator. I think there's been an update. Go ahead and bring that in right there. And you can see, if we turn on our trend catcher right here that we have everything that we need to confirm or deny these signals. So we have a sell signal right here that got confirmed. Again, the way that we confirm sell and buy signals with Lux Algo is we use the sell signal or the buy signal, and then we use trend catcher here to confirm it. So we see the sell signal here, then we see the confirmation here. For example, we see buy signal here, then a day later we see the trend catcher confirmation here. If we just go ahead and set a vertical line every single time that there has been a confirmation on the daily chart with Lux Algo in the last year, you will find that there has been ample reason to follow this indicator. Let me just go ahead and go all the way back here to, let's go right here to this confirmation. These are vertical lines representing all of the confirmed signals on Lux Algo. If we see here, sell signal, negative 42%. Buy signal, plus 45%. Sell signal, negative 12%. Buy signal, all the way up here, plus 42%. Sell signal, negative 38%. Buy signal, again, we're doing historical analysis to prove whether or not we should be using this indicator. Buy signal, 9% to the upside. Sell signal, negative 4% to the downside. Buy signal, plus 10% to the upside. Sell signal, down currently 54%. So in the last year, on the daily chart, using confirmed signals, they have not been wrong once. How powerful is that? So that's why I want to bring up Lux Algo today, because I want to encourage you to understand that when we see a little bit of a bounce right now, as much as we want it to be bullish, trend catcher has not turned green on Lux Algo. We have not seen a buy signal, and based on what we know about Lux Algo, typically to see confirmation with a buy signal and green trend catcher, you need to get quite substantially above the trend catcher. We would probably need to be to at least $24,000 and stay up there for a couple of days before we saw a confirmed buy signal. Right now, it doesn't seem like we're going to be able to get there. Lux Algo is saying that we are still in this confirmed long-term downtrend. So by the way, again, if you have not gotten Lux Algo, again, it just had an update. You saw me have to renew it. Just go ahead and close it out and then bring it up again. It's 5.01. Sign up for Lux Algo. Use coupon code Jebb, J-E-B-B, for 20% off the link in the description box down below. Do it right now. You will be glad you did. You will make your money back very quickly. Nevertheless, the point that Lux Algo and that I am making is that the bulls are not so much in power right now. The bears took a little bit of a breather. Unfortunately, it does seem like the bears are taking that strength back, and they are starting to move the initiative back in the bearish direction. We saw that there was a strong confirmed sell signal right here on the 27th of June, which was 2 days ago on Lux Algo. That confirmed all the way down, negative 2%. Then we saw this confirm and move to the upside like 0.11%. You know, it technically moved to the upside. It wasn't a big move because we were trading sideways. Then we're currently under a sell signal that is confirmed and dropped us all the way down, negative 4%. If you look over here, this confirmed buy signal rallied us 5% as well. This is on the hourly chart, by the way. So what we're seeing here is that Lux Algo is performing very well on the hourly chart as well. Buy signal right here rallied us 17%. Sell signal dropped us, confirmed right here, negative 4%. We're under a sell signal right now. That sell signal is something that we want to pay attention to, and we want to look at the strength that the market is experiencing or not experiencing. Which direction are we going in? On the hourly chart, we're seeing a bullish MACD cross, but at the same time, we're seeing MACD put in lows that we have not seen since the 18th of June. In fact, we're seeing lower lows than what we saw on the 22nd of June, despite there being higher price action levels here on the hourly chart. Now, that could mean to you that we are seeing bullish MACD divergence, and that would be true. I am looking out for bullish MACD and bullish RSI divergence. Even on the RSI, we can see that there's a downtrending level of support right here. That downtrending level of support is great because we have an uptrending level of support right here. That does give us an argument that we could be seeing a rally come into Bitcoin relatively soon. But that's only if we're able to hold $20,000. And so my point right now is that on the daily chart, and this is kind of going to wrap up everything that I've been saying the last few minutes. The point is, on the daily chart, we are seeing a strong confirmed downtrend on the daily chart with Lux Algo. Obviously, we're in a strong downtrend. I don't think anybody's doubting that. We do have bullish MACD and bullish RSI divergence, which indicates that we could see a bounce here. However, if we remember, the bulls are not so much in power right now. It's more that the bears have let up their strength, and because the bears have let up their strength, then the bulls are able to move a little bit. It's almost like when you're playing tug of war. If one side lets up a little bit and then they start losing ground, that doesn't mean that the other side necessarily, this being the bulls in this case, got stronger. It just means that the tension from the bears got weaker. And so the bulls were able to make a little bit of ground and pull in that direction. That's what we're seeing happen right now. It's not so much that the bulls are stronger in the last couple of weeks. It's that the bears pulled so far that they're taking a breather and giving a little bit of ground and potentially could see another leg down. And that's what I think we're witnessing right now, is we're witnessing a test of $20,000. And if we do break below it, then that will begin the next leg to the downside. all in all, especially with what we're seeing right now with the FUD in the news having to do with Cypherpunk over here selling $6 million in crypto probably at a major loss. I don't think we know the exact entry position here, but they are more than likely selling at a big loss, losing millions of dollars. Three Arrows Capital going illiquid and insolvent and bankrupt, more or less, on the back of $673 million worth of loans. And some of the other metrics that we're going to be getting into a little bit later having to do with consumer confidence, bond yields, etc. Considering all of those factors and considering that we're probably going to see another rate hike in July, despite the fact that we'll probably see a recession confirmed or at least be predicted in July for this year, so far, we're still seeing a big drop on Bitcoin. A lot of that has to do with the fundamentals. A lot of it has to do with the technicals. Most of it has to do with the sentiment. And if we do see Bitcoin continue to test $20,000 for too long here, and we don't see a strong bounce to the upside up to $21,500, $22,000 or higher, if we don't start setting higher highs up here above 21.7, then expect $20,000 more than likely to break. Because the next time we see a Fed meeting, we're more than likely going to see a lot more FUD into the space because it's probably going to be 50 basis points. I think they came out, and T-Shrim, you can correct me on this, I think they came out and there's reason to believe that we're not going to see 75 basis points again. But even another 50 basis points could be enough to drop the market below that all-important level of $20,000. If that occurs, considering its major psychological support based on the fact that it's the previous all-time high, we could start to see the windfall come to the downside after that occurs. Now, I also want to compare the market that we're in right now to 2018, because I remember vividly when Bitcoin was trading above $6,000. You can see we've been in the 5 digits for a while now. Above $6,000, a lot of people didn't expect, including myself, did not expect for Bitcoin to drop below $6,000. Some people were calling it. I was not one of them. I will admit that. That was 4 years ago, by the way. In that time, I learned a very important lesson, and that is whenever markets continue to test a level of support over and over and over again, and they don't eventually start to set new higher highs and bounce off of it, they're almost certainly going to break the level. And that's what we saw happen here. We saw Bitcoin drop all the way down initially to $5,000, bounce off of a previous all-time high level of support, which was $5,000. We did drop down to 5K, which is previous all-time high, dropped down to there, had a 4-day bounce, dropped through that again. We dropped down to 4K, bounced off of that briefly because that was not exactly an all-time high, but it was an important level in the past. Bounced off of that briefly. Then we continued to ladder down. We laddered down to $3,500, which was another important level. That was a level that was set as resistance here in August of 17. And support here in September of 17. Laddered down to that. Then we broke all the way down, dropped down to $3,200, which was another important level. Then we dropped eventually down to $3,000, which was a previous all-time high level as well. What's the point here? In this drop, after we capitulated below $6,000, let's use analogy here. $6,000, let's call that analogous, or using an analogy to $30,000, because I think those are pretty much the same level in both of these markets. After we dropped below $6,000, call it 30K, we had one bounce, a second bounce, a third bounce, a fourth bounce, and a fifth bounce. It took us 5 bounces before we finally found our bottom. Now, I'm not saying we're going to take 5 bounces, but what I am saying is that we've seen, you could argue for 1, you might be able to argue for 2. I don't think we've seen a 3rd, 4th, 5th, 6th, or 7th bounce to the downside. And maybe we don't need that many. I'm not doing any analysis and predicting we need exactly 5 bottoms before we find the actual bottom. What I am saying, however, is that we probably have not found the bottom based on one bottom. We're probably going to have another one that drops down to 16,000, then another one that drops down to 13,000. And eventually, the buyers will get so confident in the market that they will start to scoop up Bitcoin at those levels in a big enough way that you will see Bitcoin start to trade sideways for a time, and then after that, it will more than likely go into an uptrend. You're probably not going to see this big V bottom where it drops all the way down, then bounces above local highs up to 40K immediately. You're probably going to see a bit of a V bottom like we saw right here, and then sideways action for several months, maybe even a year, as the market continues to strengthen its case for a bull market, as the Federal Reserve hopefully gets inflation under control and then starts reducing rates more than likely in the next 6 to 12 months for the sake of combating a recession. As we start to move through this winter, as we start to see more companies go bankrupt and more companies start to go insolvent, we will probably stay below $20,000 at those levels. And then after that time, we will start to go into an uptrend building on a stronger foundation. But right now, what we're doing is we're shaking out the weak parts of the foundation, which makes the whole house weak. But then what we'll do through the accumulation phase that will last through the rest of this year is we'll come in and we'll backfill all the cracks in the concrete of the foundation, if you will, with fresh concrete. And we'll build a stronger foundation from which we can build to $100,000 in 2023 and 2024. All of this to say, Bitcoin's testing 20K right now. There's reason to believe, much reason to believe, in my opinion, that we're going to break below it, fundamental, technical, and sentiment. That we're going to break below it, that we're going to start trying to set lower lows down below $17,700, and then we will see the bottom start to form probably in the next 3 to 6 months, but time is going to tell how long that will take and where that's going to be. You've heard Tim and I talk about $9,000 as the potential lowest, $13,000 as a level, $16,000 as a level, and many, many more. But T-Shroom, what is your take on the way that the rest of this bear market is going to last? Do you agree with my take that we're going to see probably another 2 to 3 bottoms at various levels before we finally hone in on the exact bottom and then go through accumulation phase before we start gradually growing into a bull market? Or are we going to see just a capitulation and crash down to 9K and then maybe a big bounce or another level?
I don't think that 9K is in the cards. I've heard that number thrown around as well, but I think that that's too low. What I think I predicted the last time I had the opportunity, 18,500 was my prediction, and it has come down that low. It's actually gone down. It's wicked lower on the daily, but yeah, no, I think we're going lower from here just because the strongest force in the market right now is the Fed. And I will actually correct you, Jebb. I don't have any reason to believe that they're not going to do 75 basis point hikes at the next 2 Fed decisions at least. And if you go to my screen, I can show you why I would continue to believe that, and that is because the CME futures are predicting July 27th that we will go up to as high as 2.5, which would be a 75 basis point increase, triple hike. So, and if you can stay on my screen, you can go over to my chart. I had a little bit of something cooking up, but to answer your question, the long and short of it is no, I don't think that that the bottom's in. I think we're going lower from here, and that's because the Fed's got a couple more decisions to make. But we'll be talking a little bit more about how the Fed might be changing its tune potentially as a result of the most recent economic data that came out yesterday and today. If you go to my chart, though, I've got a chart pulled up. I want to focus here on the RSI story. Well, last time I was on and did a little bit of TA, I was looking, and Tim has been predicting us kind of going back up to 30 before we go lower. But I was saying, no, we're going to continue sideways movement, or at least I want sideways movement. Well, why do I want sideways movement? Why don't I want a quick bull rally? Well, one is because I don't trade, I don't swing trade right now, Bitcoin at least. But the other reason is because if we were to come up here, if we were to come up and do a little bull trap, right, then if you think about it, the RSI would also come up, and the RSI probably around now, if instead we had of going down, we had gone up, and we were now at around 22 and pushing 23, the RSI might be around that 50 level, right? And so then when the inevitable turnaround and the bull trap, snares the bulls, then the price would come down, and that's okay. But then the RSI would be up here when it starts that descent, and that would give us so much further to run, and that could potentially trigger a technical trade-off, a technical sell-off to the downside that could push us down somewhere around 9. So I'm happy that we have traded sideways. I think that's the best outcome that we could have hoped for over the last 2 weeks. And I'm hoping to see more sideways movement, because whenever I see the price starting to go up and inch up, that actually hurts me. Paradoxically right now, my feelings get hurt. I don't want to see Bitcoin going up. I want to see it going sideways. So, but that's me. You probably feel a different way if you're watching at home, but that's my TA. I also would bring your attention over to Kelly Kellum's Twitter. Apparently he was featured on Crypto RS, which is really cool.
Cool.
And that's great for Kelly. So but this is always a chart that I love looking at. This is where my optimism thrives, right? Because if you take a look at this chart, you see the black line is Bitcoin's price, and the green line and this peach line are the ones that I'm really interested in. And I know, Jebb, you don't see color very well, but the bottom line here is the green line, and that's the one that I'm really paying attention to. In the past, that has been the biggest predictor. That has been kind of the extreme, and that's what it's called, the extreme floor or extreme buy Fibonacci band. And in the past, we've had to go as low as that, but we also penetrated through. But that peach line then became the support when we did penetrate through. And interestingly, the time after that in mid 2020, when we did not go down to that green line, the extreme floor, we actually had already pierced through that peach line. That peach line, of course, being the macro floor 200 moving average. So really interesting chart there by Kelly Kellum. Of course, you'd be remiss to not do a takeaway here. At current prices, we are through the peach line, but we have not yet penetrated or gone through the bottom green line. So we are in the same scenario that we were before, meaning we may not need to go down and touch that green line or go through the green line.
We might not. And to be clear, I'm not saying that I think the bottom is at $9,000. I think in an extreme black swan event we could go down there, but I do think that the bottom is probably just a little bit below $17,500. Even on the chart, you can see that line is starting to trend down just a little bit. We could potentially see the bottom come in around maybe $15,000. I think you're going to see a slightly lower bottom than what we saw at 17.5. I would personally put my prediction for the bottom somewhere tentatively between $14,000 and $16,000. I think you're going to see it drop a little bit more. You could potentially see it come back to the local high set in, the end of June 2019, almost exactly 3 years ago, which was set at $13,700. Call it $14K for evenness, for simplicity's sake, and then see the bounce from there. I do think, and I've been saying this for a while, even right before we drop down to 17.5, that we're pretty close to the bottom, and I think that it is going to be in sooner rather than later. Let's go ahead and jump into some super chats, and then we will jump into our discussion.
No, absolutely, and I like that take. I think that 14 to 16 range is very reasonable, and probably by the mid fall we'll be touching those levels.
I agree.
And do we wick lower down to 9?
I'm talking about I was talking about a wick to 14.
Yeah,
we could wick to 9.
I think wicks can go anywhere. I mean, we've seen some crazy wicks.
Yeah.
Especially on Ethereum. But anyway, we'll get to the super chats.
I know
here.
a wick named John.
Hey,
Makes movies.
Pew pew.
Pew, pew.
All right. Well, we've got
a
new one too. Okay, so we've got one from NMCT, November Mike Charlie Tango, and donated $5. Flexing my military knowledge there.
Boom.
And he said, "I am in the military. It's not fake. I'm just in the National Guard, guys. So it's a little different. Do your research."
I was driving around Jacksonville the other day, and I saw like 7 National Guard armories. I was thinking about you.
Yeah, there's a bunch of armories
Like
up
he
there.
used to come up here and play with cool guns.
Yeah, but everybody's been wondering why is T-Shroom out and about if he's in the Army? Well, there's a thing called the National Guard. Check it out.
Yep.
Google's a helpful resource. Crypto and
our jobs would be much harder without Google.
Okay, crypto and markets are so bad right now that a couple of the cruise line stocks and tech stocks are almost at their pandemic lows. Yeah.
Yep. No, the market's getting pretty bad, and we're going to talk about that here in a little bit. Definitely.
Yeah, so I've actually been holding CCL, that is Carnival Cruise Line, for a little while, and it has not been pretty, but luckily I didn't, FOMO into it. I just bought a little bit. And I like to keep a little bit of a lot of different things on my balance sheet just so I can track it that way and start to DCA into if I need to. But I would say that there's very little that crypto has to do with cruise lines. Cruise lines are going to be very much affected by consumer sentiment, which we're going to talk about a little bit more later on. The pandemic obviously had a big impact on cruise lines, but they are still higher than their pandemic lows. At least Carnival is. All right. So that's a good comment. That's a really good, multi-sector observation. Unpaid. So this was just one that I saw. This is not a super chat, but actually we had a super chat, so let's go to that. Thomas Valente donating $5 said, "Jebb, thoughts on safe wallet staking platforms for Cardano?"
Well, I'm calling into question the entire staking industry right now, and the lending industry here in crypto. You know, we saw right now we're seeing and this will lead us into our next segment. We can read that other comment that you were going to talk about first, but. You know, I remember when I got into Bitcoin and crypto, we had something called BitConnect. And BitConnect was offering 1.1% a day. So it was offering 400% a year. Obviously, it was a Ponzi scheme. It went under in January of 2018. It was one of the things that helped lead to the 2018 bear market. And then literally, as if nobody had learned their lesson, like 3 days after BitConnect went under, something called Davercoin came out. And it was the exact same platform with a new user interface and a new skin to it. And then everybody tried to sign up for that, and then it went under in like 2 months. And so we saw the first wave of lending and interest-bearing account services go under. That was built; those were literally built as Ponzi schemes, to be clear. I'm not saying the lending industry is full of Ponzi schemes. I do think the lending industry has gotten a little bit too excited and was not prepared with enough cash on hand to pay out its people if they wanted to withdraw for a bear market. We're going to learn those lessons through this bear market, but we're going to see a lot of companies go insolvent and potentially go illiquid, potentially insolvent, and maybe even bankrupt. So as far as safe wallets and staking platforms, I mean, use the Daedalus wallet if you're looking to hold Cardano. But as far as staking, and then staking Cardano isn't that bad. Excuse me, I was talking about lending. Staking Cardano is a great idea. I think you can do that over on Daedalus, so definitely check them out.
Yeah.
But did you have a comment you want to mention?
No. So there's one more super chat. Somebody sympathizing with your color blindness. This is Michael Miller, donated $5. Jebb, I am also partially colorblind. Imagine when we see our first full color rainbow on or off chart. So that's really fun. That's really interesting. I'm not colorblind.
On the other side,
yeah.
Michael Miller might be a believer. That would be beautiful.
Oh,
yeah.
oh, in heaven.
That would be beautiful.
You know, I will say that is touching. There are glasses that they make that you can actually do that without having to.
But
die.
they don't do as good of a job as actual color vision.
Of course. Well, the thing about it is, I'll tell you what.
I've known about that for like
on
7
the other
years.
side,
Never gotten it before
on the other side, we're gonna see colors that even
That we don't
I
even
can't
see right
even
now.
see. You know, so
Oh, in heaven.
so it's gonna be
glorious.
pretty. It's gonna be pretty lit.
Yeah,
guys.
apparently like snakes can see colors that we can't. They have like different type of rods and cones. That,
So
we
call me a snake
Call
when
you
I
a
get
snake.
there.
maybe.
Golly.
All right, and then Will McGlone donated $2, but there is one unpaid chat that I wanted to acknowledge, and this was Lee Jacobson asking the very important question: where is TA Tim today? He's in court.
He's in court.
So there you go.
got jury duty.
He's got jury duty.
Yeah. I pulled the same joke on Monday.
No, he's all good. He's just helping out the Florida, the people
Helping
of
out
Florida,
the people of Florida.
bringing justice to the people.
Bringing justice to the peeps. Well, guys, let's go ahead and jump into our next segment. And it all starts here with this tweet from Gary Black over on Twitter. U.S. final quarter one gross domestic product growth came in at negative 1.6%. That means the GDP of the union shrunk by 1.6% in the span of one quarter, putting the economy on track for back-to-back negative quarterly GDP readings, which is a recession by definition. If you see 2 quarters of GDP growth, that is 6 months of GDP growth that is negative, that's when you start calling a recession. Fed's aggressive tightening policy to fight COVID-driven inflation that is already in retreat will likely cause Fed to pause rate hikes after July 50th through 75th. After July 50 through 75 basis point increase hike. So the point is that they might start pulling back some of those rate hikes so that they can try to fight the recession. Right now, they're fighting inflation. The point is that when you're fighting inflation, you end up hurting the economy in the short term, but helping the dollar in the long run. So you end up having potentially a recession start because you're tightening the economy and making money literally more expensive for people that want to borrow money. For example, I reported on a metric a few days ago on the channel where the average interest rate for new home purchases was at 4.2%. At the beginning of this year, it's already at 6%. It's already gone up and factored in the Federal Reserve, the effective federal funds rate increase quite a bit over just the last 6 months. And so the point here is that if we see another quarter of negative GDP growth, we will officially be in a recession. And that could change the Federal Reserve's opinion on how to fight this. In fact, we even have about the last 25 years of GDP growth rates as reported quarterly. And you can see just how ridiculous it got back during the beginning of the pandemic. In quarter one of 2022, we saw negative 5.1% growth, when normally you would see 2 to 3% growth a year. We saw negative 5% growth in a quarter. Then in quarter two, this is when all of the travel bans happened, the cruise lines got shut down, the entire economy halted, everybody was at home. Quarter two of 2022, all of you will remember it, we had negative 31% GDP growth, which means that the economy shrunk from, I think, around $21 trillion in GDP to like $14 or $15 trillion in annualized GDP for that quarter. It shrunk that much. Then it rebounded 33% the next quarter. The thing to keep in mind, though, is that if you go down 33%, you have to go up 50% to regain those levels. So we didn't regain back to where we started, but luckily in the next several quarters, quarter four, we saw 4.5%, and then 6.3%, quarter one of 2021, 6.7%, quarter two of 2021, 2.3%, quarter three of 2021, we saw Bitcoin grow quite a lot in that quarter. Then, we saw Bitcoin start to drop quite a bit in that quarter as it correlated with the stock market and the bond market and the equities and everything. in the economy in general. Then we saw a growth of 6.9% in quarter 4. Last quarter, we have now confirmed that we saw a negative 1.6%. We're likely going to see probably, and T-Shroom, I'd love to hear your forecast on this, between 2 and 3% negative GDP growth in the next quarter that is finishing here in a couple of days, but it'll take us a month or so to get that data. Where do you think GDP growth is going to come in for quarter 2 of this year?
For quarter 2, 3 I feel like is pushing it, but it could easily be 3. I mean, I think it's
negative
probably
3.
Yeah, negative 3.
Yeah.
I think it could be more conservatively -1, -2. But when you're looking at these, and I can go ahead and break it open if you want to go to my screen.
Go for it.
Can I just note something real quick?
Go ahead and note something.
The note that I have is you said, you basically said that it would be unlikely to see 3, but it would be likely to see 3, is essentially what you said.
We could see 3. It's in the cards, but I think it's unlikely. And I'm not like an economist. I don't know.
I was anyways.
I mean, when you see it deviating only 1.6%, I think that 3 is going to be a lot. I'm just not seeing the data that would push. I think so. If you go ahead and take a look, but thank you for keeping me honest there, Smay. I do appreciate that. If you go to my screen, I've got the U.S. consumer confidence pulled up, and this was data that came out yesterday. So this is very fresh data. This is June 28th. So that was yesterday. Came out at 10 a.m. And this was the actual consumer sentiment number with 98.7. So it has dropped down below 100. The forecast was 100, previous 103. And if you can look at it on the chart there. So this is basically just how much demand is out there. How much are people buying, and are they buying in the same quantities? And and talking about grocery store, talking about oil, talking about just things that people go out and buy. People are buying less stuff, and there are specific parameters that this will pull to try and figure out the CPI or what people are buying. But it's a lot of those types of things. So that's kind of what I would base my prediction on. Why I don't think it's going to go down to -3 is because we're not seeing like 87, we're not seeing 86 or even 85. I think we're still at like 98. I think it's not healthy, but it's only a couple points away from 100. It's really not super far cry. I think we can rebound from that. And I think also as inflation comes down, people will be able to afford more things, and they'll be incentivized to go out and buy more things. So that can be kind of a self-healing wound.
How much of the last 5 quarters of GDP growth that were reported at 2 to 6, 7% would have actually potentially been a lot lower, or maybe even for quarter 3 of last year, because it was only 2.3%, actually have been negative if we hadn't have been seeing so much inflation skewing the data, T-Shroom?
It's a good question. I mean, but
because we're seeing 1% inflation a month right now almost. And a lot of that's taking a couple of years to catch up. So we're seeing data that is coming in now that really, honestly, a year and a half ago, we could have been seeing 0.5% or 1% of inflation every single month.
You're asking, like, how would this CB number be affected if inflation was at the target rate?
Not CB, but as far as quarterly gross domestic product. Because that's what we're talking about with a recession. Because there is an argument that we can make that if we went back and we factored in, and nobody does this. I've been talking about this for a long time. If you go back and you factor in all of the real inflation that we've had, not this made-up number of 8.6%, but the real inflation, whatever the number is, we don't have a real number. If you factor in that real number into what we saw with the GDP growth, where we're seeing 6%, 4%, 2% a quarter during a pandemic where everything's getting more expensive, the entire economy is getting much harder for people. What would we have been? Would we actually be in a recession every single quarter going back to January 2022, or maybe quarter 4 of 2020?
I think most certainly.
January 2020. I'm sorry.
Yeah, I think if the data was actually honest, in Estonia the inflation rate's up to like 19%. So we know it's probably not higher than 19%, but it most certainly is higher than 8.6. This is the data that the U.S. puts out. I trust it a lot more than China's data. Sure. I think that there's some perverse incentives there with the way that their government is set up for the reporting is way more skewed. But here in the United States, I think we have a little bit more honesty, a little bit more integrity, but probably not a whole lot. much more than China. So 8.6 but it's still impressively high. It's still remarkably high, and the Fed is obviously pointing all of its weapons right at the interest rate and just blasting away, and that's manifested in these triple rate hikes. So but yeah, I mean, it would have been worse. The GDP would have been lower if inflation had been purely reflective of what it actually was.
Yeah, and honestly, if we went back all throughout history, I'd really be curious what GDP growth would look like if we didn't see inflation. Because if you're seeing 2% projected inflation every year for the last 30 years, at least that's what the Fed's been trying to do, and you're seeing 2 to 3% GDP growth every single year, are we really growing? We're getting more technologically advanced, we're getting more efficient, but are we really growing all that much? That's the question. What is the standard of living? Has it really gotten that much better when wages have gone up 4 times and you've seen college go up 12 times in the last 30 years? Are we really seeing standard of living increase even with these GDP numbers? So that's really the deeper point I want to make here, is that yes, we're finally seeing a recession be confirmed, more than likely. In fact, to give you the exact date, Q2 advanced GDP metrics will be released on July 28th at 8:30 a.m. I believe that's Eastern time. That is the advanced projection of what Q2's GDP growth or decline will be. And then I believe, in T-Shroom, you can correct me if I'm wrong, about a month later, then we'll see them come out and actually confirm. And that confirmation is normally only about a 0.1% difference. So if they come out and say 2.3% to the downside, it's probably going to be between 2.1 and 2.5% to the downside from there. So the point is, we are about to start a recession, almost certainly. The good news is that, as far as I'm concerned, we've been in a recession. And you might wonder, why is this good news? As far as I'm concerned, we've been in a recession for the last year and a half. We've been in a recession since you shut down the entire economy. Now the economy's opened again because the world started focusing on something else, which is very bad in its own right, which would be the conflict in Ukraine. But the economy has opened up. Now, the skies have closed down around Russia, and there's been a lot of sanctions around Russia. So in a way, the economy's still shut down on certain parts of the world in a way that we haven't seen since the opening of the Iron Curtain back in 1991, when the Soviet Union collapsed and the skies opened up for the first time. We had free skies for 30 years, and now they're closed again. And that's not the West's fault. What we're seeing right now is we're seeing growth in the global economy. Well, we were seeing growth in the global economy, which was metrics skewed by massive inflation. Like you said, 19% inflation in Estonia. I would be surprised if we weren't seeing at least 19% real inflation over the last 2 years in the United States. I would say that we've been in a recession since probably about March of 2020. The reason, again, that I say that's good news is because recessions typically only last so long before the economy adjusts and then it starts growing again. Because I do think that there is real growth in the economy. I don't think it's all the numbers are skewed based on inflation. Quality of living has been going down quite a bit, but that is, not quality of living, but the amount of the average household income compared to the amount of money they have to spend on basic necessities and basic things has changed very much dramatically to the downside. The point is, over the last 2 years, we've seen the market get very, very, we've seen reported GDP growth, but we've also seen the price of living go up dramatically, much faster than we've seen in inflation. That shows up, for example, in energy. You see gasoline prices up over 200%, lumber prices up 200%. What we were talking about before stream, I have a vehicle and I'm getting offers to purchase the vehicle that I bought for 50% more than what's left on the loan. That's what I'm getting right now, because the price of goods have gone up so much, and the vehicle's a 2021, so it's not like it's a new car almost. And I'm getting deals to pay almost 50% more for the vehicle than I owe on the vehicle. So we're seeing inflation go absolutely crazy right now. What's the point here? We've been in a recession more than likely since March of last year, of 2020, excuse me. That recession is getting so bad now that we're seeing things happen like, Cypherpunk go under. We're seeing Bitcoin drop. We're seeing the markets drop. We're seeing Three Arrows Capitals go under. In fact, we're also going to talk a little bit about how, as he talked about, the consumer confidence has gone down significantly. We're starting to see a constriction in a major way. The reason that is a good thing is because it means that we're getting probably close to the end. I would say that in the next 6 to 12 months, more than likely, we're going to see the market start to bottom out. However, when that occurs, when the market starts bottoming out, then we're probably going to see some pretty big things happen. We're probably going to see, as Kevin O'Leary said, a Bear Stearns. situation where we start seeing major bankruptcies. We've even seen that occur here in crypto. We're seeing Cypherpunk sell a bunch of its holdings. We're seeing 3 Arrows Capital go under. We saw Luna go under. We're seeing potentially an illiquidity crisis going on at Celsius, potentially even an insolvency crisis. We're going to talk about that in a video this afternoon having to do with a legal team that they just brought on. There's even things happening with the bond curve, which we're not going to get into today because that's pretty complicated. The point is the bottom's here probably in 6 to 12 months. When that occurs, you're going to see a lot of big companies, both in crypto and outside of crypto, go bankrupt. You're going to see it get really hard on the average American, on the average European, on the average person that's dealing in the modern economy. You're going to see it get really hard on them, and then you're probably going to see the bottom. And we're probably going to see that happen on the S&P 500. We're probably going to see that in the DJI. We're probably going to see that on Bitcoin probably in the next 6 to 12 months. And the reason, again, I'll say it a third time, that all of this is kind of a good thing is because it means that we're more than likely starting to get to the end of this. So, T-Shroom, would you say that even though it looks like we might be about to confirm a recession, could we actually be close to the end of it because so much has already happened?
Yeah, I think it's possible that the recession could be ending. It's so ironic that the way that we measure recessions, oftentimes we only ever know that we're in a recession by the time we're out of it.
Exactly.
And that was certainly true in 2020. But what I would say is that, well, first I want to make a correction. We won't have the final GDP data for Q2 until actually September 28. Because that's just when they release it. They just got to be super certain. But we will have a second estimate in July 28 on that the second quarter. But that's a preliminary. So there's 3 estimates. There's the advanced, which is the first one that comes out, the preliminary estimate, and then there's the final estimate. The final is the final one. That's the one that gets written down in history books. That's the one that economics professors are referring to as they're teaching young minds about the economy and how to skew those inflation rates for decades to come. But yeah, so if I could, I'll just move it a little forward here.
Yeah,
So what does all this mean? There is a silver lining here in the short term. So all of this bad economic data that's coming out, the CB and the GDP, it's looking like we're going into a recession. But that can mean in the short term that equities and crypto could actually see a boost. Now, why is that? Because what the Fed has been doing and what it's been able to do is it's got all this ammo, it's got all this justification because of how high the inflation rate is. It's got all this justification to raise those rates in an unprecedented level. These triple rate hikes are not something that we do very often in the United States. And so I think the last time we did a triple rate hike was 1994, the year I was born, and Tim was born. And so there may be less and less of an argument going forward as we go deeper and deeper into this recession, especially if we get to Q3, Q4, and we're starting to see those GDP numbers get into the 3s and maybe even the 4s. That's when the Fed is going to be a lot less likely to continue to rate hike. But what we could be seeing is a rate decrease a lot sooner than we thought. And that's because the Fed just wasn't anticipating how bad this recession could get. So ultimately, though, we will just have to wait and see. Again, if those inflation numbers get higher, God forbid, but if they continue to stay around 8.5, 8.6, and they don't seem to get lower, then the Fed is more than likely, the way that they've been talking about it, they aren't going to stop rate hikes. They're going to keep them at 75. But if unemployment starts to spike and the GDP continues to go down, and then the Fed's going to be not only going to be having to really scratch their head and figure out what the heck to do, but they might go ahead and start bringing those rates down.
And when they do, that's probably going to correspond with a bottom in Bitcoin. It's probably going to correspond with hopefully a bottom in the GDP, because the GDP would likely turn around after we see these Federal Reserve, the effective federal funds rate start to go down. When all of that occurs, you could see kind of this magic moment where in 6 to 12 months where everything kind of bottoms out all at once, the economy starts to grow again as the economy goes through the pain that it needed to shake out all the weak hands, all the weak companies. You know, in 2018, we were shaking out weak hands. Today, we're shaking out weak companies. A good example, Luna. A good example, 3 Arrows Capital. These companies that were over-leveraged. We're going to start to see the weak hands get shaken out, which we've already seen a lot of them, but there still are more to go. We're going to see the weak companies get shaken out, and we're going to see the weak economic data start to turn around, I think, in the next 6 to 12 months. So there is good news on the horizon. There is a light at the end of the tunnel, but it is going to take a crypto winner to get there. And that's the point, is that the bottom for Bitcoin, the absolute bottom in price action might be in the next couple of months. It might be around $14,000, might be around $16,000. I do think it's lower than the wick that we saw go down to 17.5. But more than likely, we will see Bitcoin bottom out in an absolute fashion, probably about negative 80% from all-time high, which would make sense because the last two bear markets, we bottomed out negative 85% from all-time high. I don't know that we're going to go that low this time. That would put Bitcoin at $9,500 or to about $10,000. But we could see a $14,000 Bitcoin bottom out in price over the next few months, moving on maybe into August, September, then start to rally on into 2023. And we could be back up at all-time high, maybe mid-2023, going on into early 2024. That's what we're seeing happen right now. And when that occurs, I do think you'll see the global economy in a more healthy state. We're taking the hit right now from all of the inflation that occurred during the pandemic. I think that we're starting to see some of that roll through. We're starting to see some of those effects get spread out, if you will, when they're all in one place, when they're all in the inflation, when they're all in the supply chain, they get very difficult. But when you shake them out, you start to see the economy start to recover. And I do think that that's what we're going to see happen, but that is going to take time. A couple of the things that we need to see happen before we bottom out is we need to see the Fed having a smaller justification to rate hike. Again, like T-Shroom said, if we see rising unemployment, if we see consumer confidence continue to go down, if we see GDP growth continue to be negative, if we see the markets continue to drop, if we see a plateau and a drop in the housing market, which hasn't happened yet, but could happen very soon with these rising rates, then you're probably going to see the Federal Reserve turn around the interest rate hikes. Probably not going to start adding to the balance sheet. They're probably going to not do a ton of printing, but they will probably slow down, maybe plateau those rates, give the market a little bit of time to adjust, maybe even drop them by 25 basis points, maybe even drop them by 50 basis points and hold at these levels. If you look at my chart, I can show you the way that the Federal Reserve did this in 06, for example. It hovered at 5.25% Federal Reserve. The effective federal funds rate held at 5.25% from August of 06 until October of 07. And because those rates were so high when we started the recession in 08, because of the housing crisis, they were able to drop those straight to the floor and use that as stimulus to the economy. So that's probably what we're going to see happen here. We could see the effective federal funds rate rise all the way up to, maybe 2, 3, 4, 5%, but that will likely come down in the next 6 to 12 months. Probably wouldn't hit 5% if it comes down in that time because they're probably not going to do another 75 basis point hike. But they will see that drop, and then that will lead to strength back into the economy. So again, all in all, next 6 to 12 months going to be difficult for Bitcoin, crypto, and the overall markets. But after that, if you're able to dollar cost average and hodl through that, pull a Michael Saylor and find the money to confidently and securely invest in Bitcoin more and more, even at these levels, you're going to be very glad you did, because you might be looking at Michael Saylor right now saying, you're down 33% on your investment. You're down over $1 billion on your investment. You have 130,000 Bitcoin, and they're all at a loss right now on average. When Bitcoin's trading at $100,000 and Michael Saylor has made $8 billion, he's going to be the one laughing. So my encouragement to you is that if you have the ability to buy Bitcoin at these levels safely, while also understanding that you have to weather an economic storm coming in the next 6 to 12 months. Cost of living is going to go up. You could see gas prices hit $7 a gallon before long. You're going to see price of groceries go up quite a lot. There's already global supply chain issues going on with food because of the conflict in Ukraine. They're the third largest producer of grain in the world. Life is going to get more expensive, and it's going to get more difficult in the next 6 to 12 months. But if you can carve out from your budget money to invest in Bitcoin and crypto at these levels, you're going to be glad you did. And that's the biggest takeaway that we have for you today, is that a recession could trigger the Fed to reconsider rate hikes and start dropping them. And that would likely add a reprieve for crypto and the market as a whole. But until that occurs, these levels are probably going to stay for some time. We will be in a crypto winter, and we will be looking to buy these levels. Our team will be. I know a lot of you guys will be. And make sure that if you have not hit that like button and subscribe to the channel, that you do, because we'll be posting content all the way through all of this. We're not going anywhere, and we are looking forward to helping you guys grow in your knowledge of cryptocurrency and your knowledge of how to trade and invest appropriately and profitably in cryptocurrency all the way through it. T-Shroom, do you have any final thoughts before we wrap out?
I do. I have a final thought. Kevin O'Leary has said there needs to be another Bear Stearns to signal the bottom of a bear market. Bear Stearns, bear market. I never thought about that. But what we are looking at right now is Celsius is on the teetering block right now. They could either go into they're actually illiquid and they have your money. They just need to sell off some assets and give it, and then they can give you your money back, unfreeze it. Or they're in a much worse case, like 3O's Capital, they're insolvent and they don't have your money, and you're probably not going to get your money back. So if you are interested in finding out more about that, you can watch today's afternoon video where we do a deep dive into Celsius and also provide history and a great analogy and historical context for what is going down over Celsius. You're going to love it.
You're not going to want to miss that video, guys. There's a great one coming out this afternoon. A lot of drama going on with Celsius. Are we about to see them go under? Are we not? Love to hear everybody's thought about that in the comment section. If you enjoyed today's video, I want you to do a few things. Hit that like button, subscribe to the channel, sign up for Lux Algo. I showed you in today's video how on the daily chart, it has literally not made a single wrong call in the last over a year. Every single call it's made. If you confirm the buy and sell signals with Trend Catcher, which is important because no strategy should be just with one part of one indicator, but if you use the entire indicator, or even just a smaller part of the indicator, but a broad part of the indicator, it's going to give you all not perfect signals. There will be times it's wrong because it's not perfect, but it will give you extremely strong signals. On, as I showed you the hourly chart, been great signals the last 7-8 days. That's as far back as we looked. And then the last year on the daily chart, been extremely powerful signals. Get Lux Algo, links in the description box down below. Use coupon code Jebb, Jebb, 20% off at checkout with that coupon code. Kelly Kellum, who's one of our instructors over at Club DeFi, even just mentioned in chat about how powerful it is. So if you like Club DeFi's teaching and Kelly Kellum's teaching, well, he stands by Lux Algo also. So make sure to sign up. Link is in the description box down below. Guys, before we go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.